Woo, baby, we're going to talk about the markets as I just invested $10,000. We're going to break down where I put that money, discuss the earnings we currently see out of Tesla and GM and Enphase and Pepsi, your dividend favorites like Visa, and if that is a conversation you'd appreciate on your path to financial independence to perhaps one day retire early, consider hitting that like button because we got a lot to get into. And though I've been relatively bearish with the rest of the investor and the finfluencer community, I'm sure you've watched the Meet Kevins of the world and the Jeremys that are stacking cash, all concerned. It's not really me, right? Like I've always been cost averaging, and over the last 2 days, with what I've seen out of earnings thus far and the correction we've seen and the over bearish sentiment, I couldn't help myself. I said, hey, I got to invest some money here. I got to take some capital and throw it in. So I actually threw 10 G's out of my corporation into the S&P 500 within my tax-free savings account. And as I mentioned on my live stream, my corporation owes me some money. Now, I don't have a ton of liquidity, but because I haven't paid taxes and I have some cash sitting around, I will fund my cash position, eventually selling some of the S&P down the road here, probably sometime within the next month. But in the meantime, while I have this cash, I was like, hey, I can't help it. The market's down. Let's just start accumulating it and throwing it into a tax advantaged account. Well, the opportunity is persisting, right? So during this whole crazy volatile earnings season, which might be not the best time to do this, yeah, I took that 10 G's and I've got about 19,000 US just sitting within the S&P 500 here. VOO, I got about 41 shares just within this account right now. And we're going to see how that turns out because I'm trying to make a little bit of money on the spread here as hopefully it starts to bounce back because we've seen a big correction in tech companies, a lot of other companies, but guess what? The rest of the earnings period is looking great and we're getting a lot of stocks bouncing, and if this persists, we could fully recover in the S&P. Time will tell. I'm always bullish in the market, but taking a look at the earnings season itself and what's been going on across the board and what made me do some of these buys is just, let's take a look at some of these companies. We'll start with the most controversial at best when it comes to Tesla, GM, Enphase, and then we'll talk about Visa and Pepsi and some of these dividend pairs that I think are truly resilient. But why did Tesla go up? They posted absolutely abysmal earnings, which tells me that we've seen a lot of this priced into the stock already. And the second thing is you got a lot of options traders, you got a lot of shorting going on, that a lot more than within recent times. So I think that kind of built up and accumulated to a point where a lot of people perhaps closed those positions out, and we saw this nice little bump up into the 150s into after hours. But they gave a little bit of outlook into guidance, and then we'll take a look at the absolutely just horrible numbers here, but they're basically just saying, hey, when it comes to profit, while we continue to execute on our innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by the acceleration of AI, software, and fleet-based profits. They're very focused on the future of self-driving and stuff like that we haven't seen come into fruition yet. But they also kind of pointed out the fact that we have sufficient liquidity to fund our product roadmap. So we're in this kind of really strong balance sheet position that's going to get us through this tougher market environment and hopefully to the next growth phase of the company. But if you take a look at those earnings, that is not happening today, folks. Like, you need to believe that the EV transition is going to happen over the long run, and you need to believe self-driving is a thing, robotics, everything that they're doing plays into the ecosystem of their growth in the future, because it is not happening today, but it is not only just happening to Tesla. Every EV company is getting wrecked, and any company that even thought about EVs is giving up on it, right? So if you believe in that future, Tesla is just building their moat to an ever stronger position, which is debatable. Now, I could be wrong. At least I'm putting my money where my mouth is, but we can see that their revenues are down 13%. Basically energy and generation and storage revenue is up, which is surprising to me considering how abysmal Enphase's earnings were. Services and other revenue is also up 25%. Kind of cushioning the blow of the total revenue, basically, down 9%, and gross profit at minus 18%, which is brutal and abysmal. But what keeps me motivated about the company is this broader ecosystem, this amalgamation of startups that have come together that I think are each going to play into what exactly we've seen with Apple over the long run, like the watch and their headphones. Each one of these things is going to become a multi-billion-dollar business, in my opinion. Now, I could be wrong. Obviously, I could be wrong, but everyone focuses on the vehicle side of the business. They forget about the whole other side of the ecosystem here, the vertical integration, the expansion into humanoid robots, self-driving, et cetera, energy storage. So we need to see how this pans out over time, but I will be picking up more Tesla tomorrow. I just wanted to see what was happening and kind of base out these earnings because we knew it was going to be bad. I wouldn't be surprised if the stock continues to pull back, but anywhere in the 140s to 160s, I'm just as comfortable as buying in the 180s and 190s where I was buying. I really feel this $100 to $200 mark is going to be my accumulation period over the year. So what does this mean for companies like GM, right? GM posted, we can see the numbers here, we'll take a look at, because GM's been trading trading up 5% this week, and earnings gave it a nice little healthy 5% bump where most of those gains have come from. So why? What led to this? Well, firstly, the revenues are up 7.6%. That's great. We got to justify that regular auto sales are starting to come back, and GM's doing a fabulous job of this. And somehow their net income was up 24%. So how did that happen? Well, you have to imagine that GM has given up on all their future prospects as it stands today. They are not going to be building EVs right now. They kind of cut that multi-billion-dollar, sucking out of their income, bag so they can make shareholders happier today. They're not investing right now into Cruise, which was halted because of an accident. So no more self-driving for this company. And if you believe self-driving and EVs and all this stuff, these future efficiencies matter a lot to an auto company, then I wouldn't be that pleased with this right now, right? Like, this is kind of short-term gains, but is going to lead to long-term pains because the company is no longer investing in the innovations. Right now, I could be wrong. Again, all this is going to pan out over time. We'll see what happens. But again, I'm placing my money where my mouth is and I'm making the bets. But I'm shocked Tesla has done as well as they've had with the energy storage stuff because, man, solar is dead. EVs right now are dead. That is a fact of life. Are they dead in the long run? No, but they are dead today. And we're seeing it in Enphase earnings. Enphase is down, it's actually looking like it's bouncing a little bit, but it did drop a whopping 12%. Considering if you take a look at the revenue numbers here, from $726 million to $263 million. Oof. Kill me. That hurts. Oh my God. Diluted EPS. Don't even get me started. I'm honestly shocked Tesla's not down more, and I'm shocked Enphase isn't down more with how abysmal these numbers truly are. So nonetheless, we'll see how that market evolves. Let me know what you think in the comment section below. But let's talk about Pepsi. Pepsi, the beautiful, wonderful dividend payer that is actually dropping on earnings. Kind of a shock to me. They've had some recalls. They've had some issues that might be driving into these earnings. But when I take a look, because you read these, right? Like, they beat estimates, but they had product, recalls. They had weaker, basically lower income, which, missing on guidance a little bit. But come on. Who cares? The numbers were actually pretty good. If you're a dividend lover, this is what you want to see. Take a look at this. Net revenues for Pepsi from 17 billion to 18.2, or 17.8 to 18.2, right? Gross profit was up nicely, like a nice little healthy chunk here. Net income from 1.93 billion to 2.042. This isn't a huge conglomerate grower, but this is nice. This is great to see. It looks like, they're kind of leveling off here from some of the troubles that they were experiencing. Nonetheless, I think Pepsi had very reasonable nominal numbers. Visa, Visa's skyrocketing. It's at 3.2%. For Visa, that's a big jump for a $550 billion company, right? Damn, and their numbers were just as great. Take a look at this, double-digit growth, net revenue up 10%, net income up 10%, earnings per share up 12%, non-GAAP and net income. These numbers are astounding. Like Visa, MasterCard, all these traditional giants, and we've seen this with JP Morgan, a lot of these companies, they are posting very great numbers, which is what we've been seeing in the prior quarter. So if the trend remains your friend, you have to presume that these earnings are going to probably rebound the market, and they're starting to, right? So long as Meta, Microsoft, these companies post good numbers after the major drop that they had, they're either going to probably nominalize out the stock price, or the stock price is going to start to rebound and go back up because people are still hyper bullish on this market, and we are in a massive uptrend right now that might not break unless something dramatic happens here. And honestly, geopolitical events and everything that's been going on and the touting of World War III has not actually come into fruition. So I think that's what's detrimented the stock, and it's rallied gold and all the stuff that's going on. But at the end of the day, you buy the dips. The dip keeps dipping, we're going to buy more. But for now, I think this dip buying opportunity is relatively great, and I'm going to be picking it up. After hours is looking pretty good for a lot of the market right now. I'm not going to be bearish. I'll buy this, and we'll see how it plays out in my tax-advantaged account. But yeah, I'm very happy here. The only thing I want to buy is a bit more VDY. I'll probably pick up some of that in the next day or two as well, and I am going to be buying a lot more S&P. I've got some contribution room here still, and corporation still owes me a bunch of money, and it's going to be getting in here. Don't you worry, baby. You watch. We're going to be buying like there's no one buying tomorrow, man. Like nothing's going to exist tomorrow. I got to buy this stuff while I feel like it's necessary. Get that money working for me today, but I'll pass it off to you. I'd love to know what you think in that comment section below.